guys, welcome back to my channel where we're all about leveling up, elevating, and living our best lives. So I had a number of you ask questions about insurance, how it works in Uganda, whether I'm insured here, if I'm insured abroad, etc. So I thought it would be best to bring an insurance professional. So today we have...
Hi, my name is Dean Abidah. I'm a risk manager with Prudential Insurance. I think in the States you call them agent producers.
I think Canada, so, something along...
They're called agent producers.
Something along those lines.
Something along those lines. I'm also a representative of the MDRT, which is the $1 Million Roundtable of Financial Advisors. And basically, I'm here to answer your questions about whatever it is that you need to know about life assurance.
Yes, so today we're going to have a general, broad conversation, and then I'll leave her details below in the description box. So if you guys have specific questions, please do not email me, email her. I will not know. Okay, so let's get into this video. So the first question I have for you are, what are the different types of insurance in Uganda, and what do you specifically specialize in?
Insurance is actually a very wide topic, but we have what we call general insurance and we have what we call life assurance.
Okay.
So I'll predominantly speak about the life assurance, but what you need to understand with that general insurance, we cover things like marine insurance, there's fire, there's professional indemnity, there's even engineering, some things to do with construction of the roads, there's oil and gas as well, and there's medical insurance, there is comprehensive, which is under motor, there is fire and burglary, there is fidelity that covers money, there's even money insurance. So it's a very wide topic, but I'll just dive right into
life insurance.
Life insurance. Basically, what life insurance is, it is, truth be told, what I'm giving is just peace of mind.
Yes.
You're transferring the risk on your end to my end by paying a certain premium, a certain amount of money. And what we do is we cover people's life. We give them peace of mind. We give you a safety net. It's a plan B.
Yes.
Yes. In the case that, Lord forbid, anything happened,
then at least I know I'm okay.
For example, let me ask you a simple question. You came into town. Why are you wearing shoes? Why do you wear shoes?
To make sure that I don't touch the ground.
A needle doesn't go up, a nail does not go up, a stone does not touch it. Exactly. You know what I mean? Why do you wear clothes? Why do you wear glasses? That's all to mitigate risk.
Right.
So some people actually unconsciously don't realize that every time you leave your house, you're actually exposed to risk. So what we do is we mitigate risk.
Gotcha.
Yes,
Okay. So can you tell my viewers what falls under life insurance in Uganda?
Life insurance, we have what we call endowment plans. We have group life.
Okay.
For example, a company can decide, an organization can decide to say, we're going to cover the lives of our employees. And in the case that a risk occurred, maybe there's a certain value attached to it.
Okay.
But of course, for as long as you're employed, those perks are there. But
as long as you're employed.
For as long as your contractual agreement ends with the employer, then those perks are not there. That's under group life, and it's actually renewable.
Okay.
It's renewable annually. In the case the risk does not occur, there is no payout. Basically, your money has gone. I wouldn't say it's gone down the drain, because if a risk occurred, trust me, the family would be excited. So it's a double-edged sword.
Right.
Now we have, of course, we have medical insurance, which covers health issues.
And that's under life.
Yes.
Okay.
Sometimes some life insurance companies also give medical insurance, and also other general insurance companies.
Okay.
Because suppose someone passed on and things like that.
Right.
So it's one of those that's in between.
Okay.
We have endowment policies. Endowment policies are policies which are actually very, very dominant in Africa.
These are the ones you were telling me about that I'm not used to. I'm not big on understanding insurance, but I know abroad I don't think we have this. So I really found this interesting.
Actually, there are a few countries
that do it,
especially in Asia. But I know in the States and Greater North America, there is a tendency to have what they call whole life policies.
Yes.
That's what you guys have.
That's what
someone who's 30 years old and is worth $1 million, and you're like, how is that possible?
Yeah.
This guy decides to take what they call a whole life policy. Meaning, only when the risk occurs, what is the risk? Only in case he dies. He gets a total permanent disability.
Yes.
Is when they pay out. So for as long as this gentleman,
healthy and
lady
well.
is healthy and well, he's still going to pop those dollars. You see what I mean?
And I think that's what always scared me from insurance. So I was like,
no, you don't.
Why?
I don't have kids
yet.
You know why? Insurance is not about you having kids. It's not about you having a family. For as long as you have an earning, for as long as you earn, you have an income.
Yes.
For as long as you have a life plan. You see, most people think insurance is about death. Okay, why lie? When someone passes on, a permanent disability happens, their family hits bank.
Yes.
But the end of the day is insurance is the fact that you take on an insurance policy because you're alive, you're going to live. There's going to be a moment in your time that you're going to retire.
Yes.
There's going to be a moment, you don't have a kid right now, Rachel, but in 5 years or 6 years, a child may come up.
Yes.
So why start? Why would you want to start planning then when you can start planning now? The world is changing right now.
That's true. It's adulting. It's adulting.
They call it hybrid retirement. You do not have to. You don't have to crack your back till you're
60, 70,
keep working because you feel you're not financially secure. Life insurance, our endowment policies enable you to have tailor-made plans in order to suit your financial needs or goals. So our policies here, for example, in Uganda, the ones that I usually deal with our clients are called endowment policies. You choose to take on a policy, let's say between 5 years to 25 years. You choose the term. I have a conversation with you. We have an in-person conversation and we try to do what they call a needs analysis. What is your financial goal? Where do you see yourself in the next 10 years? I know many people in the diaspora and they're trying to hustle so hard, and time will come when they say it's time to go home. When you come home, what is it that you have hedged? Yes, you might have had money when you're in Canada or in the States, but when you come home, do you have something that you have hedged against that will suffice for you at a point that you want to settle? Have you started putting money aside for land? Have you started putting money to build for construction? You see what I mean? So you can start saving right now, and it's important that you start now. Why? In insurance, actually life assurance, age is a principle. The older you are, the higher a risk you are. So when you're healthy, when you have a disposable income and you're still earning, I reckon and implore that you definitely get on.
I like these endorsement policies you said?
Endowment
policies.
Why they call endowment is because they have an investment. There's an investment part of it, and there is then the life, the protection.
That's why I like the both. It's not just protection, you also can...
The thing is, we guarantee a certain value, attach a certain value depending on how much you pay and how many years you choose to save for, which we call the tenure, and then of course your age. So what I also need to, what's even amazing about this endowment policies is, most people think insurance is like dumping money.
Yes.
And I totally understand from a consumer and end user point of view.
Or even just the whole life policies that we're used to knowing about. It really looked like dumping money.
It's like dumping money. But you see, at the time when the risk occurs, some of us don't tend to think about these things, but they're inevitable. Whether you like it or not, you're going to age. Whether you like it or not, you're going to get sick at a certain point. Whether you like it or not, you're going to retire. Whether you like it or not, you might have kids and they need to go to school. So these plans enable you plan towards those. Exactly. Those milestones in your life. Now the advantage is, now let's talk about how your money works for you.
Yes, that's what I was going to ask next, actually.
So when you put your premium, every year we declare what they call bonuses. Of course, bonuses are dependent on the performance of the portfolio of the fund. So what happens is to also cover against things like devaluation, inflation, and things like that. We don't want your money staying stagnant. So what we usually do is there's actually a bonus that is allocated to your policy annually. So
similar to like an interest kind of?
Exactly. Yes, it is. You'd actually call it an interest. We like to call it a bonus.
And it's easier for the everyday people to understand as well.
A bonus, or other people call it an interest. And usually our interest or the bonus is not simulated against what you have given us. But it's actually simulated against what your total value is.
So I was going to ask that next. Does it vary from person to person, policy to policy?
Now, the policies are all life policies at the end of the day. What do? We cover your life. At a point that something happened to your life, one passed on, deceased, God forbid, or one got a permanent disability, we take on that responsibility. We make sure that your family is not compromised. We pay out.
Of course.
Yes. So the policies only differ when we differ in terms of the value differs depending on the age.
Right. Okay.
The amount which
sense.
we call a premium that you're paying.
Yes.
And the time period that you have chosen to save for.
Okay.
But
okay.
ideally, the principle is the same.
Okay.
Yes.
That makes sense. So the next question that I have for you, seeing that of course I had a life in Canada and having a life here, and that's a lot of my viewers. Do policies work for globally? Do they cover me when I'm abroad? Or if I have a policy abroad, can I move it here? How does it work for people moving back?
Okay. Now, first of all, let's imagine you got a policy in Canada, right?
Yes. Yeah.
You have a policy. You open the policy in Canada.
Yes.
Of course, there's certain when you open a policy, there's certain documentation and certain questions that they ask. Nationality,
yes.
authenticity of your citizenship and things like that.
Yes.
When you open the policy, ideally that's the host country. So you come to Uganda 10 years after.
Right.
Exactly. That policy is not transferable because unless, of course, they have a subsidiary company. For example, first we have Prudential is in the UK, it's in the States under Jackson Life, it's in Asia. But irrespective of that, they do not transfer policies. But this is what happens. Suppose you have a policy in Canada. You came to Uganda and a RISCO card.
Right.
Does that mean that your Canadian company would actually pay for that risk? Yes, they would.
Okay.
The risk is covered, but the policy is not transferred because of jurisdiction laws.
Okay, that makes sense.
But remember, the liability still on your Canadian company.
Okay.
Unless, of course, for example, I'll give an example. When some people take on policies and they say, we are data entrants, we are researchers, and you actually find out they possibly work for the army, they're in very high risk areas. Suppose they passed on because of the civil war or something, they were not prepared because this person did not declare right from the onset.
Okay.
So with insurance, every time there's certain changes that might be what we call hazardous.
Right.
It's important that you communicate.
So every time you've changed employment, everything.
For as long as it's not a hazard, it's one of those that are high risk. For example, you can decide to go and become fly a warplane.
Right.
So what happens to you? That means actually you're considered high risk.
Right.
So
your policy would change.
Your policy, they're now going to raise the terms and conditions, and it will definitely
that
change
makes sense.
because you're definitely considered high risk. So due to geographical location is not such a big deal.
Okay, it's more so what
covered.
you do.
It's what you do.
Okay.
You'll definitely be covered. But you cannot transfer the policy because of the jurisdiction laws and so many technicalities. So with that said, it is not transferable.
Yes.
But yes, you will be covered.
Okay. Do you have clients that may have policies in both countries then, or multiple countries?
Actually, we have a portfolio. I have a portfolio of so many clients who are in North America, who are in the States. We have clients who are in Sweden.
Okay.
And these guys have policies that are running. Whenever they come down for summer, they even decide to pay for a whole year. They actually have policies because they'll tell you, the other side we have policies, but the payout will be at a point of death. Can I take out a policy where I can choose on how I want to save, rather I choose to save for 5 years, 6 years, or 10 years.
And that's what I actually really like.
So here in Africa, we tend to go for the short-term policies because of yes. Our policies are usually short-term, but the idea and the principle of insurance, to be very honest, is about long-term.
Of course.
But you see, when you go to different countries and different continents, the market is totally different. The needs are totally different. So we need to work with that. We need to understand what is it that people need. We need to be customer-centric in order to provide the right tailor-made plan to suit their needs.
Okay, so hence the policy or the endowment policies that we have here that's not really as common.
But if you want a whole life policy, we do whole life policies. Many people who do whole life policies are people who tell you, listen, my wife is a stay-home, I'm the breadwinner.
Yes,
I want to suffice.
Which is a lot of our society.
So I need money. I do not want to compromise my family. I do not want to compromise the education.
Right.
I want continuous wealth generation at the point that I am not there.
Make
This
sure
is
that they're
almost
covered.
like generational
Yes,
wealth.
yeah.
Most Asians tend to do it. Out in
Yes.
the States, you call that a trust fund,
Yes.
I believe.
Yes.
It works the same way. So you can actually have a whole life policy.
Okay.
But remember, they only pay out at the point
Point
that
of
the
death.
risk occurs. But with the endowment policies, they will pay out where the risk does not occur at the point of
Yes.
maturity. You can actually get your money. We even have times here in Uganda, because of the economy, and we have people with issues of job security.
Yes.
And you find that we're not very consistent, to be honest, sometimes with our premiums. And there comes a point where you find that many people have defaulted, and some people get issues and they want to liquidate. In insurance, we call it to surrender.
Yes, okay.
It is very important and prudent that people understand that with life assurance, you cannot surrender below 3 years.
Okay.
You will lose
Everything.
everything.
Ah, okay.
Because
that makes
ideally,
sense. It's
remember, let's
incentive.
say you're paying just 100,000, which is about 20. I think it's less than actually $26.
30 Canadian, 20
Yes,
something
about
USD.
$26 per
yeah.
month. Let's say you want to save for 10 years. We'll value you at about 4K, about $4,000 US. Meaning, in case whether you got a policy today on a Friday,
Yes.
and you popped, Lord forbid,
God.
a risk
Yes.
occurred on,
Yes.
you ship out on a Sunday,
Yes.
we have to pay that 4,000
Regardless,
regardless.
yes.
So when you decide to surrender, you have messed up what they call the entire pool.
Right. So that's why it's
because if
minimum.
the risk occurred, would still pay. Yet you've just
Yes.
given us your $26.
Yes, that's
See
true.
what I mean? So yes, some people actually surrender. You can surrender, but you surrender after 3 years.
Okay.
And
with a penalty?
of course, there's a penalty.
Yeah, 'cause I was gonna say,
that's given every financial instrument for as
But,
long as you
yeah,
do not abide as per
to the
terms and
whole-
conditions to the
full-
end of your maturity.
Yes.
There will definitely be a certain penalty. Depending on how much you're paying, the time period that you took,
Right.
and how you have
What's
been,
left over.
and how you've been paying your premiums, basically.
Okay, that makes sense. Okay. Now that we obviously can tell there's a difference with life insurance policies depending on what different country you're in, and especially in Uganda, what are the benefits of life insurance here?
Okay, I'll make it very specific.
Yes.
Yes, because honestly, there's so many.
Yeah, there's
benefits,
very many.
Yes, but the first one would be peace of mind.
Yes.
You know, when you know that you have a fallback position, there is a way you feel you have that safety net, you have a plan B, you know that you have a buffer.
Yes.
You're comfortable. I.e., for example, someone, let's say a guy about 40 years of age, has a 3-year-old, has a family. Today, Lord forbid, let's not even talk about death. He gets a permanent disability.
Yes,
He cannot
this is
work. What
possible.
happens? His stream of income, which was his job, is
Yes,
taken away
it's
from him.
gone,
It's
yeah.
gone. So what happens? If he had a life insurance policy, that would definitely
Cover.
suffice and definitely serve him as a form
Yes.
of income to him and his family.
Yes.
At a point that this person, Lord forbid, passes on, imagine they took on a mortgage. Imagine the kid is still ongoing. Imagine the wife does not have a job or they had a business.
Yes.
That money that's paid can actually suffice for enhancement or development or creating capacity, building skill for their business.
Yes.
It can pay for that mortgage. Actually, do you know that you can actually use your life insurance policy as a form of security or collateral for a loan?
Oh, okay.
Yes,
That's
you
good
can.
to know as
You
well.
can. After 3
That's
years,
good
yes,
to
you
know.
can.
Okay.
Yes, you can.
Okay.
So another thing is financial security. You know, let's be very honest. One of the hardest things, especially here in Africa, especially in Uganda, is we do not love to save. Actually,
what we make is what we spend.
Our expenses,
I'm guilty too.
Our expenses surpass our income. It's amazing.
Yeah, that part's a bit much, but yeah.
Our wants
Yeah,
are totally way over our needs.
Yes, 100%.
Someone earns 2 million, but somehow the expense is about 6 million. So where does that 4 million come?
I
Where
don't
does
know.
that come from?
All the hustling.
Exactly. Now, with that said, the thing is you need to plan. So
Yes.
what insurance does is it's more like forced saving.
Yes.
You know, like when you take a loan and you need to keep paying up for your loan.
Yes.
You do not pay this, of course, your interest goes high.
Right.
For us, we do not penalize you.
Okay.
But of course, it gives you that you become financially woke.
Yes.
There's a way you start realizing
Responsible.
you become responsible. You're
Yes.
like, you know what? I have a financial goal. And I know I may not like the fact that money is coming out of my account every other month, but at the end of the day, you'll be glad and you'll thank us, trust us at the end of the day, at the point of maturity. So it helps you to save,
especially just saving for, like we were saying earlier, with the type of policies for business plans or whatever it is that you want to do. If you want a house, owning your own house here,
even say that,
buying land.
In the next 5 years, I don't think I'm going to. I want to become an entrepreneur. I'm getting out of the corporate ladder now.
Right.
So you can decide to use that money. Can suffice,
and it makes sense as opposed to drinking it every Friday. So
let's be very honest. How much do we spend on being here? How much do we spend?
Hair, nails, everything, makeup, all these things.
Actually, you can go to a salon and decide to do a facial, your massage, and all that, and you spend about 400,000.
Yeah, which is less than what you could.
Do not do those. Of course, you have to.
Yeah, of course. Take care of you.
How about start apportioning a certain percentage of your income towards saving or investing?
Yes.
So it's very important. Money takes care of those who take care of it.
Yeah, that's true. That's very true.
You take care of me today.
Yeah.
Money. If you take care of money today,
then it'll take care of you later.
Exactly. And it's important that you start doing it slowly by slowly. Yes. You like how when you build a house, brick by brick.
Foundation.
So the advantage of insurance is actually you can even pay your premiums every other month. You don't have to put a lump sum. That's the beauty. Flexibility of premiums. Then the other thing is, of course, to supplement for your child's education. Most of us, you have a child, you have a 2-year-old. In the next 5 years, a child is going to prep school. Have you started planning? In the next 12 years, your child will be going to high school. Have you started planning?
I know. And
in the
here
next 16 years, your kid will be finishing Form 6. Have you started planning for
university? And then the thing here is education is not free.
Thank you.
We're so used to free education until 18. So you don't think about it till 18. But here, the minute the child is out, you need to start really planning from the beginning.
It's expensive.
It is.
Yes, it is expensive. Then the other thing is it can supplement for your retirement. Some people, if you look at our market or our
like our culture,
you find that most people are self-employed.
Yes.
And what happens to them if they don't have an NSSF fund? They do not have a pension fund.
Yes.
They do not have. They will not get gratuity. You see, with other companies, when you leave, you get gratuity, you have a pension, you get your NSSF. What happens to someone who has owned the business, who is in a market, who sells fruits? At about 50 or 60, they cannot work anymore. You find that's why you find most old people are still struggling because they did not plan. So irrespective of whether you're self-employed, it's important that you have that retirement. So if you start saving now, at a point you can choose to say, I want to save for 40 years. So the point that you reach 60 or 55, this cash out can enable you come as a form of income during your retirement. No one wants to retire
and rely on like everybody around you.
Your family.
No.
So why not start now?
It makes a lot of sense.
While you're still young, while you still have that income.
Yes.
So it's important. So those are one of the important benefits of life insurance.
Then what isn't covered under life insurance?
Of course, yes. Definitely.
Mention a few.
It's important that, of course, you have an understanding of what's on the other end. Basically, those are exemptions. What is not covered is things like suicide. Especially in certain societies, some people who commit suicide.
Yes, and
sometimes, of course, due to mental illness. Other times, it's
situations, whatever it may be.
And in case one did, especially here in Africa, would not pay. Below 3 years, we would not pay. Another thing is withholding information.
Yes.
For example, when you sign on a policy, we ask certain questions. Do you have cardiovascular issues? Do you have health issues? What do you do for a living? You say, actually, I'm a data entrant. And then you're in Somalia and you're actually
in the war somewhere.
In the war zone somewhere. And God forbid you passed on and reads what is the cause of death. You were in a war zone and it was a bullet wound. How is that possible if you're data entrant? It is possible, but here if the cause of death is a bullet, they will ask, what were you doing? Was it civil commotion? What was it? So you need to declare
what you do
from the onset.
Yes.
If you have a pre-existing condition, it's important because if you do not, and then
that's just fraud.
And then exactly, a risk occurs.
Yeah.
And the insurance might have to investigate, and that's when
And
you hear sometimes that some of those are fraud claims.
Yes.
Then we also have civil commotion and war. In case one was involved in a civil, there's a riot, for example.
Yes.
Look at what happened during elections.
Oh my God, yes.
There was a lot going on.
Nomination
now imagine
time.
if one of those guys were shot.
Yes.
And they're insured. What would happen? Would the company pay? Yes.
Yes, because you're just in the crossfires.
Exactly.
You were not part of the.
Exactly. But if you are directly involved,
yes, you're now
you have
the army or the
put
police
yourself
or
in
something.
line of fire.
Yes.
You see what I mean? You're actually considered high risk. Would not pay you.
Okay.
Now, when we go to war, there is non-declared war and there is declared war.
Okay.
If there was a coup d'etat, for example, if there's a coup,
Right.
and then rather a coup, and some people lost their lives and they're insured.
Yes.
We definitely pay.
Okay.
But if it's a declared war, like
Then-
what happened in Iraq, that is
Right.
a declared war.
Like we are going
yes,
to war.
insurgency, we know what's going to happen.
Yes.
This is what you need to do and
Right.
all that. So if it is declared war,
Then
you would
not.
not pay because the risk is so high.
It's the whole
But
country.
remember, exactly. And usually we also, you see, as insurance companies, we also have reinsurers.
Okay.
You know that.
Yes.
We also have
yes.
reinsurers. We take on your risk.
Right.
Reinsurers take on our risk.
Yes. Would have to be that way.
Yes.
Okay.
Right.
So speaking of payouts and whatnot, I've actually had conversation with a few people here, and I think it's just a lack of financial literacy and not understanding how payouts work and such. So a lot of people believe that, oh, if you get insurance, it'll never work for you anyway. It'll take 2 years or some dramatic number.
Yeah.
So how do payouts work here? What's the process and whatnot, specifically for life insurance?
Okay, before we get into that, we know that, remember we discussed it prior, that certain people have had a bitter taste in their mouth when it
Yes.
comes to insurance.
Yes.
Because some people tell you the
Just
claim
non-understanding.
process, these guys do not pay, and some of these things have actually happened.
Yes.
I'm coming from an end user point of view.
Yes, yes,
and also
yes.
from the insurance point of view.
Yes.
We've had issues where people, of course, do not claim. We've had issues where they're false
Oh, they
claims.
simply just didn't claim. They just didn't call and
How
say.
many people have that party and claim? Really,
Okay,
most
that's true.
people don't even claim.
That's like,
Some people don't even know what's happening. They
Yes.
don't know what's happening with their
Yes,
funds. You
yes,
see what I mean?
yes.
Then we also had companies then that were not streamlined, whereby someone would put in a client would put in a claim, and then it would take some time, and that was so disheartening. Especially,
Right.
you know, you've been paying your premiums, and at the time that you need your money. Where's the insurance company? So that's why there's been
Okay.
a lot of streamlining and things have changed. That's why it's
That's
very
good.
important that you invest with a company,
a reputable company.
a reputable company that is reliable, that is robust and highly capitalized.
Right,
Why
of
lie?
course.
You'd rather be the company that's highly
Yeah,
capitalized. That's
right.
why I can tell you that I am proud to be associated with
Yes.
Prudential because it's the highest capitalized insurance company that's been there for what, like 170 something years, almost 200 years.
That makes sense. As opposed to someone that's
Yes.
smaller and new, sure they might have some other reasons, but it doesn't
So it's
make.
important. It's important. The other thing is whenever you are filing for a claim, there's certain
things you
that
need.
you need to meet. Okay, you need to make sure that, for example, if death occurred, is the death certificate attached? If there was a medical issue and you got a permanent disability, have you also put that in for your claim process?
Right.
In the case that it's maturity, no risk has occurred.
Yes.
Do you have your policy number? Have you communicated with the insurance company and told them now? And usually we have an app that actually shows you how much you have paid,
Yes.
where you're at that moment. Imagine
Okay,
if you took
that's
5
so
years.
useful.
Yes, we have apps. These days we have digitalized things.
Everything. Okay, that's much
so
easier.
everything is just
But we're
on your
used
phone.
to abroad,
Yes, just by a
so.
tap of, you know.
Yeah.
Everything is on your
Okay.
phone. So basically what happens is you need to have your documentation, right?
Okay.
And it takes actually 2 to 5 working days.
So it doesn't take long. It's really just
No.
the due diligence
Just
of
compile
the
and make sure that you
policy
have your
holder.
just make sure that you have all your documentation
Okay.
and do it the right way.
Yeah.
Do it the right
Just
way.
get everything in
Get
order
everything,
and
send
go.
an email or just walk into that office.
So it
and
just
do
sounds
it the
like
right
people
way.
just don't know or couldn't be bothered to go through the
And sometimes
hoops and hurdles.
if it happens, no, sometimes these hurdles could happen.
Yeah.
If it does happen, you have the IRA. They can mitigate
Yeah.
this on your behalf and arbitrate if you feel that your claim, you actually have a legitimate claim and it's not being paid. please sue. That's why
Yes.
you have a legal contract.
Yes.
Some people just talk about it.
Yes.
Please sue. Actually, IRA will even help you do that pro bono.
Right. Yes.
They'll do that pro bono, so you can do that.
So all of it is there.
Yes, it is there. It's just
So
the
it's
how.
Okay.
It's the how.
Yeah.
It's the how.
Due diligence. So of course, given that you're in a different country, you also want to make sure you're financially responsible and literate, and you know what you're getting into. So, are policies taxed here? Are they taxed, and how does it go about that?
I'm proud to say that life. That's why most people put their money in life assurance.
Okay, because it's not taxed. There you go.
It's not taxed.
Okay.
That's the epitome of finance. You know, who wants to put their money
double
where it's
taxing?
Exactly, double taxing. Because ideally, when you have a policy, it's your savings.
Yeah, so you've already had
that income tax. So if you are taxing life assurance, that means it's double taxation.
Right.
Because this person is actually saving their net after taxation.
Right.
So the advantage is that life assurance is not taxable.
There you go. I think it just makes so much money.
Now, general insurance. Let's get this right.
Okay.
General insurance, i.e., your comprehensive is an 18% and a certain stamp duty.
Different.
When it comes to fire and burglary, general insurance has a taxation element. Life assurance
Yours does not.
No,
we'll get into in a moment.
Zero taxation at the end of your maturity. You will not be taxed whatsoever. It's
I think
non-taxable.
those are the fears people have. Like, will I get paid out? Is it going to be taxed? Sounds like a headache. Okay.
Taxable.
Well, thank you
no tax
so much. This is so informative. I feel like I learned a lot. Every time I talk with you, I always learn about so much that I didn't know, and I'm guilty as well, just like the rest of you, making assumptions. So it's good to get clear information.
Every day,
yeah,
so it's okay.
And it's good that it's something that's beneficial for me, my future family, and such. So it makes a lot of sense. Thank you so much. So where can people reach out to you?
Yeah, I'll share my number. I think you'll have it on your bio.
I'll leave it in the description box.
You'll have it on your description box or your bio. I'll share my number. I'll share my email. You can always inbox me. I'm a call away. I'll be available.
Hard working. She's always working, so literally she'll pick up.
I'll be able to advise you, and I believe let's walk this financial journey together. To be very honest, we need to be financially woke. It's time that we started being responsible, and we need to start being financially independent rather than dependent. So with that said, thank you for having me. This was lovely. And if you need to reach out, please do reach out. Thank you.
Thank you guys so much for watching. Like you said, all information is in the description box. And as usual, leave a comment below. Thumbs up this video for more informative videos on moving back to Uganda. Subscribe! And don't forget to subscribe. And I'll check you guys in our next insurance video all about general insurance. Thanks guys, bye.